for the coming week. In fact, on that note, let me welcome in our guest joining us on the show today, Gupta of Moneylicious Capital and Advisory Services joining in. Welcome to the show, Jay. Very good to have you on. And let me just get your assessment of how things are panning out in the market at the moment. We're seeing the VIX spiking from those multi-month lows that we found ourselves in. Along with that, of course, there's a lot of hope running ahead of this budget, but the market definitely does seem to be in correction mode. What is the sense that you have? Do you expect that we'll see a further cut, at least in the run-up to the budget?
Yeah, hi. It's been a bear's day out, I would say, a beginning of the week. But there are concerns globally, I would say, starting from the U.S. markets where there is yield curve reversals happening, and it seems that the market in U.S. are going to top out soon. Along with that, we have seen some kind of trade restriction related moves. Now India also joins into the race. We have heard today, about the Iran calling of the nuclear deal. Then we have seen, Lufthansa giving a very pessimistic outlook, and this has led to a big sell-off in the airline stock in European markets. And even on the domestic front, the liquidity crisis looms. So things are bad all way out, I would say, and the monsoon can only be the pacifying factor. So till budget, I think there are more pains left. For an investor, it looks like a good opportunity. They can be cheerful about it that for the next 1 month there would be a lot of value buyings coming, which could turn out to be a multi-bagger. But for the short term, I think it's not going to be the bulls market. I expect that market may see some more cuts. So any jump or any kind of short covering happening maybe this week or the next week should be used to exit long positions. So I am uh, hopeful that if something positive comes out in the budget, we may see the the reversal at least in Indian markets. But for the time being, being in sync with global markets, things look bad even at the domestic front.
All right, point taken. Global cues aren't helping, and of course, a lot of uncertainty ahead of the budget. So, expect there to be quite a bit of pressure in the run up to the budget. We're just about 18 days away, but perhaps this is a buying opportunity if we see that big reversal come in on the back of the budget announcement. Let's talk about the big heavyweights that really contributed to the cuts that we saw in today's trading day, starting with Reliance Industries. We closed with cuts of just over 2.5% on RIL, and they were this was amongst the top 10 Nifty losers of the day. Definitely, when we see a move like this on Reliance Industries, it does pull down the index as well. This is mainly coming on the back of brokerages coming out with mixed views on the counter over the past week or so. So we have been seeing this kind of consolidation, Jay, as far as Reliance Industries goes. After we hit those 1400 levels, we've now even given up 1300 at the moment, trading around 1280 levels, and today was a washout as far as Reliance goes. Would you use this as a buying opportunity on Reliance, or is there still some amount of concern around this counter?
The fundamentals have not shifted, I would say, but it's only the sentiment which is playing out. As I said, there are some more pains which are likely unless things turn in a different direction in global markets. But even FI numbers we saw last week, they were the sellers. So I think the selling will continue, and we may see some more cut. Even for the large names like HDFC Bank or Reliance. So I won't be advising somebody to just go out and buy at this levels, but rather wait. I think you will have better time in next 10-15 days where you can enter and buy the stock.